that brings us to our next subject, which is travel, and in particular JetBlue. We're getting a read on the consumer and where they're traveling in a number of different travel earnings reports. JetBlue shares are up by 7%. The company slashed its outlook for the rest of the year and attributing that move to a shift toward international travel. It is more domestically oriented. It also lost its partnership with American Airlines. We also heard from some other travel companies, though, where things do look better. Marriott, for example, also reported that company beating estimates, but the shares are trading a little down. And Norwegian Cruise Line raising its earnings per share forecast for the full year. But those shares are getting punished, too. So go figure. We'll see. Maybe there's some other stuff in there that is causing all of that. Dave Mazza is still with us, Roundhill Investments Chief Strategy Officer. I know you travel quite a bit because you're based in LA, so you're flying back and forth. So it's interesting to hear to see what looks like anecdotally a travel boom all around us, and yet it's not necessarily helping all of the travel companies equally.
Yeah, no, really some interesting tidbits here. So I was actually traveling on vacation a few weeks ago to Europe, packed flights, packed hotels, couldn't get around. When I traveled most recently domestically, pretty light. And I think this is perhaps indicative of what we saw out of JetBlue most recently. Alaska also was in that camp, compared to perhaps something coming out of Marriott, or even news of United creating all these mega routes. I've been on a plane for over 16 hours, but they're signing up all these 20-hour flights and everything of that nature. And what's interesting is, again, we're seeing bifurcation at the individual company level. I think JetBlue, of course, also hurt by issues with the Northeast Alliance that was broken up, and then the requirement, like other airlines, to pull back on some of this Northeast travel due to limited air traffic controllers. But it tells us that I think we need to be careful when we see pictures of packed airports or social media saying everything's fine. Those tickets were probably booked weeks ago or months ago. Mm-hmm. And so if people are looking out and saying, hey, I'm more concerned with what's going to happen around Thanksgiving or the holidays this year looking ahead, and that I think we might start to see a pullback. American Express released earnings a few weeks ago, another sort of bellwether for the consumer. Something fascinating to me came out of that, saying they're starting to see evidence. Again, these are folks with considerable incomes who have platinum cards and the like, pulling back on some hotel and airfare, but increasing spending at restaurants, both for takeout and in person. So to me, that's a sign, again, early sign, that maybe, again, there is some of a pullback of some of these big ticket spending, but people are still feeling pretty good. They want to get out of the house, want to go to a nice dinner. So that's where they're spending, as opposed to booking that vacation around the holidays or to Europe next year.
Which is really interesting, considering American Express saying that, but has a little bit more exposure to the corporate side, too, of spending. Meanwhile, you've got MasterCard that came out last week that was essentially saying, travel spending is still looking strong here, that really giving a lot of credence to what we had been hearing from some of those travel CEOs. Speaking of travel, let's talk a little more accommodations here. Opposite over at Marriott here, when we think about the company out with earnings this morning, lifting their outlook on demand for international travel and international revenue coming in better than expected in the second quarter for Marriott. They also added over 33,000 rooms globally during the second quarter here. Want to get your perspective around Marriott and the accommodation space as of right now, as travel continues to at least show no signs of slowing down immediately. But at the same time, you've got to think about how much all of these companies are spending to either bring on more capacity or just to retain that consumer too.
Yeah, I think, again, overall theme is for now. And again, this has helped the economy in aggregate this year, there has been resiliency of the consumer, resiliency of the American consumer that has propelled certain companies higher. Marriott's a great example of that, and particularly noting on that international side. So it's fascinating is that on the travel side, companies with greater international exposure are benefiting. But then, to your point, in aggregate, companies perhaps in the other types of consumers are actually not being rewarded as much, in fact, because their earnings are not as robust for other reasons. So again, American consumer bringing cash overseas, spending more there, benefiting companies exposed. But perhaps we're seeing companies and local sort of Europeans or folks living in Asia not spending as much, not confident as much.
And on that note, we also should note for our viewers out there, don't miss Yahoo Finance's interview with Marriott CFO Leeny Oberg. That's coming up later today in the 3 o'clock hour.